What's good, YouTube? It's your boy Trading Wisely back again with another video. In today's video, we're going to do a quick GJ breakdown for the week ahead. So this is the daily time frame, and this is the daily range we're working in, and price is currently deep in premium. As you can see, we have put a 3-candle pattern formation known as the evening star. So this is a nice bearish signal, and considering the context, it's deep in premium, top of the range, and market structure has been bearish. This is a nice bearish signal, so we could be looking for a potential bearish continuation in the following days or the following week itself. Now the pullback has been really deep. It's almost 100% retracement, practically 100% retracement, so that's a bit concerning, because if the bearish momentum was strong, the pullback should never ever reach 100% retracement. So this could be the initial signs of a reversal in terms of trend. So it could pull back and then maybe put in a lower low and then continue up. But in the meantime, we can look for potential shorts in the following days. So let's drop down to the lower time frame, the 4-hour. Now this is the 4-hour time frame within our daily range, and as you can see up here, price has been bullish, making higher highs and higher lows until at this point we have finally broken a swing low right here, which is the first indication of a shift from the bullish to the bearish. Now right before that occurred, we also took out this swing high, which is also a good signal, because I like to see sweeps or raids, manipulation, deceptive play before a reversal, because that adds to the steam of the move. It's like they liquidity, they took liquidity, they performed heist, and then now they're going to run away. So we have our deceptive play. We have a dice strategy, DICE. We look for deceptive play, and then we look for intention. Intention has been successful here, although albeit not that greatest break of structure, but still a break nonetheless. The candle did break below the low, so intention has been confirmed. So now what we're going to be anticipating is a pullback for the contractive phase before the expansive phase, DICE. So what I've also noted here is the fair value gap, which is from the wick here to the wick here. There's only been sell side has only been offered, so this is sell side inefficiency. Sell side imbalance, buy side inefficiency. So since only selling was offered here, we could anticipate move back to offer buy side liquidity in order to balance the books, so to speak. So this could be a draw on liquidity. Obviously after a lower low, you anticipate a lower high, and this right here, this zone that I've marked here in blue, is basically the bullish order block, the bearish order block that led to the break of structure. So we have a lot of confluences here. It's looking good. So what we'd like to see is potentially a continuation a little bit before retracement, and this level could be a draw on liquidity, or this zone itself could be a draw on liquidity. This would be the H4 market structure high, and wherever the swing forms would be the H4 market structure low. But this is good. This supports our thesis of bearish follow through. Now let's drop down to the H1 time frame. On the H1 time frame, what we can see is right here on the last candle on Friday, we had this doji candle, but what it did was it swept through this swing low, as well as this swing low. So there was a sweep of a lot of lows, liquidity. And what did I say about sweeps of liquidity? We like to see that before reversal. So this could be an indication of a potential reversal from the downside to the upside, which will consequently start the contractive phase that we look for in our DICE strategy. So this could be a potential sign that yes, we're going to start to retrace, because after a lower low, we anticipate a lower high and then a lower low if we are to have a healthy downtrend. Now what we also have on the hourly time frame is a liquidity void. From you can see from the low of this wick to the high of this wick, which was indicated by this green line. It also confluences with the 4-hour liquidity void that we highlighted earlier. So confluence upon confluence, and another confluence is that it's 152.80 level, around that level. So as you know, 80 level, 50 levels, 00 levels, and 20 levels are psychological levels that a lot of activity occurs around those areas. Banks like to use those levels, so that could be a draw on price. And don't forget also, we have this huge 4-hour block that also could be a draw on price. This is the H4 low, so price has any right to pull back anywhere within this area. As long as we don't get a close above, we are still bearish on the 4-hour. And yeah, this is basically what we're looking at on the hourly right now. So what I would be looking for in the following week is some a bullish signal. I would be willing to take long, knowing that it's just a retracement, and the actual move would be getting a short somewhere up here in order to continue the move down here. Now we have a lot of liquidity here that has been untouched, so there's a lot of money, and there's this nice fair value gap, and this was also a breaker, a bullish breaker. So if we get an entry somewhere around here to, let's say, the middle of this 50% of this liquidity, well, that gives me around 290, around 300 pips. So that is that's the target. That's what we'll be looking for in the coming week. Thank you very much, and catch you on the next video.